What's up guys, it's your boy Buju World once again. So in this video I'm just going to discuss with you the wyckoff, so on how to use the wyckoff and the smart money concept. You can combine them both. So what happened is that the wyckoff moves in 4 phases. According to the wyckoff methodology, the market moves in 4 stages. So we have the accumulation phase, we have the accumulation phase. We have the accumulation phase. This is our accumulation phase. Then we have the reaccumulation phase. Then we have what? Our distribution phase. After that we have the redistribution. So what happens is that we have what? The accumulation, reaccumulation. We then have what? Distribution. After distribution we have what? Redistribution. Right? So like I said, so in this video I'm just going to show you on how we are only targeting what, we are only using what, both the accumulation phase and the distribution. I'll make another video on how you can tackle this one and get and mix it with what, with the smart money concept. So this is our distribution phase. So what happened is that we are only focusing on what, on the accumulation phase and the distribution phase. So how can we mix the accumulation phase and the distribution phase of wyckoff and mix it with what, with the smart money concept, and use them as what, as confluences? So according to the wyckoff methodology, what happened is that according to the wyckoff methodology, what happened is that during the accumulation phase we have what, phases. We have something like this. Okay, let me delete these phases here. Okay, what happened is that in the accumulation phase we have something like this. According to what, this is our accumulation phase. This is our accumulation phase, right? This is our what, our preliminary support. We have this preliminary support here. We have our preliminary support. We have our automatic rally, right? After our automatic rally we have what, our secondary test. We have our secondary test. Then we have what, ST in phase B. We have our ST in phase B. Then we have what, our spring. We have our spring. After our spring we then have what, our test in here. We have our test in this level. The market test what, test our spring before the market rallies here. So according to the wyckoff, if you only use the wyckoff, it can be a little bit complicated. But then if ever you mix this with what, with our smart money concept, our PS, choose that the market comes from what, from a trend. Then the market was in a downtrend, As you can see, we have our preliminary support, our automatic rally, and then what our ST, which is our secondary test here, and our secondary test in phase B. I'm sorry, ST in phase B. Then you have what our spring. This is, I think this is the UA or something like that. So this one, it is what our test. The market test what? Then the market test what? Our spring before we do what? We rally. But then we change what? We change the trend. So what happened is that you can mix this with what? With the smart money concept idea, right? So most of the time we can use what? This wyckoff as a confluence to balance what? I meant what? We can use this wyckoff methodology as a confluence to balance the smart money concept. Because in the smart money concept we have something like this. If the market drops like this and we create what? Our low in here, right? I mean our high in here, then we do what? We break this high, then this become what? Our what? Our change of character. And when this is what? Our change of character, in case we have an order block in here, the market drops, most smart money concept traders expect what? A buy at this level here, right? Even here sometimes we can have something like this. We can have something like this. This level can be a little bit up. We have this what? Our previous high in here, then we create what? A low here to create what? The ST in phase B. Then we rally again to create what? A high, a higher high. This is a highest high since it is higher than this high. Then we drop. If we have something like this, an order block or something here, most smart money concept traders, they'll do what? They'll be expecting what? A change in character, and they'll be expecting what? A buy at this level here. When they expect a buy in this level here, what happens is that the market drops a little bit to do what? To take out this what? This low here. And when we take out this low here, we create what? Our spring. Then automatically they are what? They are being stopped out. Then they are getting stopped out. Then the market what? Rallies. So since we have what? This concept here, continuous normal concept, that when the market do what? When we are in a downtrend, then the market do what? Break our previous high, then they expect what? A change in character, and the market have to do what? To rally to their direction. So about that, something like this. The market have to do what? To then rally to their direction. They expect what? A change in a trend. So if we can see, this is the another type, or I can say another manipulation of this, right? According to smart money concept, this is what happens. I'm pretty sure most of you guys have what? Are familiar with this pattern in here. So if you can see, this one, it is what? This is the what? The smart money concept methodology. This is the what? The wyckoff methodology. So it happens. So sometimes the market can do what? Can drop, rally, drop, and then what? Break our previous high to create a new higher high, and then what? They expect what? A buy in this level, and then the market, they expect what? The market to do what? To rally and change what? The direction, since the market came from what? From a downtrend. So according to the wyckoff, when the market drops, it drops. The market drops, create our preliminary support, and then our automatic rally, and that what? This is our secondary test. I mean, then we create our UA either at this level or at this level. Then we create what? ST in phase B. So when the market come here, mostly, like I said, smart money traders, they'll do what? They'll highlight this as a church, which is what? The change of character. They'll highlight this as a church, the change in character, and they'll be expecting what? An up move at this level. So sometimes the market can even go deeper and do what? Manipulate and take out this low here as a rate to do what, to create a spring. So both this concept work, both these concepts work. So how can we do what? We eliminate our losses. How can we eliminate our losses in this scenario? Because when the market comes in here, sometimes it can respect this pattern here. Others they can if you can see, others they can call it what, the quasimodo level. This is our what? This is our low, this is our low, our high, our lower low. This is our higher high, and then this is what, from this low until this lower low, it is our QM level, and then the market respect what, our quasimodo level, and then it do what, it rallies. But then not all the times. Sometimes we can do what, we can even go deeper to do what, to even manipulate this lowest low here, which is in wyckoff we use it, we call it what, the ST in phase B. We create what, our spring, and then we do what, we want to rally. And when we rally, you can be stopped out. Sometimes it happens, what if you don't enter this trade and then the market respect this pattern? So how can we do what, we trade the change of character or the change in a trend. What happens is that we can use what, the confirmation entry. We can use the confirmation entry. So we can use what, the confirmation entry. So the confirmation entry will get it at what, at our lower time frame. We'll get our confirmation entry at a lower time frame. At the lower time frame, that's where we get what, our confirmation, which is the confirmation entry, which is what, it is not too risky. So let me take in the what, in the smart money concept perspective. In a smart money concept perspective. So in a smart money concept perspective is that we'll do what, we'll have a what, a downtrend. We have a downtrend like this, right? Then the market does what, it creates a change of character, and on our way to drop, we have something like this. That's when we can do what, we use this level here, that level I'll show you as a entry. That's our confirmation entry. This is our change of character, and then we use this what, change of character, same thing as here, but then instead of entering at a risky level, remember this is our what, our point of interest here, or order block, or the the demand, so we have what, a break off structure, right? This is what, this is our internal market. This is our internal markets in the what, in the lower time frame, until the market does what, breaks our previous internal high to do what, to break out the structure. We take out what, this high, then we reverse, then we use this level as what, an order block, and inside order block at a smaller time frame as what, as our confirmation entry. That's where we then take what, our trade. That's when we do what, we take our trade, then we take our trade, then the market do what, we use the same level that you would have used if you have taken the trades in this level. So this trade, it is not what, it is not that risky, unlike this one, right? And it will give you what, a huge risk reward ratio, unlike what, a higher time frame supply or demand, right? the same pattern applies even in a downtrend, as in what, as an accumulation, even as a distribution. You just have to do what, to this is just an inverse, you can say. So in a wyckoff methodology, what happens is that sometimes, like you can see, this level it was what, this level it was then what, respected. We respected what, our demand, our other block, our point of interest after what, after the change of character. But then in this second scenario here, it is what, this is our wyckoff methodology, which is what, the manipulation of this one. So what happens is that the market dropped and dropped and dropped and dropped until we do what, we create this level here, which is our first level, which I can say is this level here, this level, same as this level. So we then created what, a new high. After that we created what, a lower low, which taken out what, this low here is a, as a rate, right? Then we have taken out this low here, then we rally. After we rally, we take out this what, this high here, to create what, our highest high. After our highest high, then you see what, a change of character. This is what, our change of character. After our change of character, the market did what, dropped. After we dropped, instead of entering a trade in here, like I said, it is too risky to enter here. That's the same thing as this one. We do what, we'll be waiting for what, for market to rally, okay? Or well, the market did what, it break out what, our level. After the market break out our level, it created what, a spring, which is our spring, our low in here, our lowest low, right? Which is our what, our swing low. After what, we've created what, this highest high here. After we've taken what, this and created the change of character, then the market created what, our spring. It means that we have manipulated what, at this level. Most of the time, yeah, we do have demands in here, demand, point of interest, order block, which is the same thing. So we do what, we just break and break and break and break until we created what, until we create what, our spring. So by any chance, if we were to use a what, a risky what, a risky entry like this, maybe we just bought at this level, just buy at this level at the same time, we would have what, took out a as a loss. So what happened is that when the market just break and then we do what, we created our low. So as a confirmation entry, like I said, we'll use confirmation entry on both this type of scenario, this type of schematic and this schematic. So after our spring, the market will do what, will rally to create what, our LPSY, I think. So after that, we will also, even in here, we'll also have what, an internal, we will also have what, an internal structure. This structure are in what, in our lower time frames. So after this, I can say we just we're going to have something like this. It will be something like this, yeah. Obviously the market can just move in a straight form. So after we just dropped from this high here, this highest high here, to our spring, will obviously create what, some lower low, higher low, lower low, higher low, lower low, higher low, in what, inside a internal structure, which is what, our lower in our lower time frame, sorry. So after that, we'll have to do what, after our spring, we will rally to do what, to dig out our previous high here. It will be somewhere like somewhere here, right? In this scenario, I just showed you how it will be. It will be somewhere like this, which is what, a break off structure. Then create what, our new high here. Then after we dropped, that's what we call what, a test. That's what we call a test. in what? In our wyckoff methodology. That's what they call what? A test in our wyckoff methodology. Then we do what? Then we use it as what? As a entry. Then it will give us what? A huge risk reward ratio. It will give us a huge risk reward ratio. It will give us a huge risk reward ratio in this level. That's why we do what? We'll be entering, at least they are both what? We eliminate risk on both smart money type trading and wyckoff methodology. I'm sorry. So this, I can say this is our internal structure, how our internal structure will be like. So this is our previous high, we just dropped, we break our previous high to create what? Our highest high in here, then we drop, then we take out what? The order block in what? In the lowest time frame, then we do what? We run. At least they are both what? In both scenarios we have to what? We have eliminated risk. Trust me, this happens most of the time. People are getting stopped out. It happens sometimes people are just confused on how the market can just what? Not respect their demand and then what? Manipulate them a little bit, take out their stop losses, then do what? Rally. It have what? Created this scenario, I mean this schematic in here. Same thing applies in a what? In a downtrend, when you anticipate the downtrend, which is a distribution phase. It is just what and what? It is just a I'm sorry, it is just an inverse of this. So if you just can check it on the chart, if you can just check it on the chart, guys, I think you will get it right. You will do absolutely get it right. Just like here, something like this here. Just like here. Can you show? Let me show it in an inverse form. What happens is that the market rallied here, created what? This high here, right? And then this high was then what? Okay, this high was then what? This high here was taken out by this high. Then this high here was then taken out by this high here. Then we just dropped. After we dropped, we created what? A change of character here. After we created a change of character here, we then what? The market respected this level here, but then it just taken out this as a fair value gap. We just use this fair value gap. It was not an order block here, it was just a fair value gap. And then we did what? Oh, it respected here, right? That's right, we just respected here. And then we did what? We dropped, take out this what? This order block here. Then we did what? We dropped. That's the same thing, guys. You can check the wyckoff methodology on how on the distribution phase. You can check the market came out in a uptrend, then we did what? We just consolidated, created our levels here, then we did what? We reversed at this level, right? So you can use what? The change of character in the smart money concept and combine it with what? With the wyckoff, and check it out with the wyckoff, and you can just use what? The confirmation entry. I promise you will have what? A good winning rate. Thank you guys, you just have to do what? Check it on the real chart and apply the same method. It's not really big deal, but then I promise you and I guarantee you that it will give you a good winning ratio. Thank you.